Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Checking in on the market, so the bears starting to prove themselves, very high volume. If you've been watching these videos, I've been saying that the burden of proof is on the bears and they have to come with higher than average volume. They've certainly done that. Today's turnaround, and I say turnaround because it was a very significant bounce in the morning and a very significant dump in the afternoon, and the dump was marked by a tweet from Donald Trump. Here it is. Pretty much just saying they've come back from China. We don't have a deal yet. We're going to put 10% more tariffs on $300 billion worth of goods. China didn't do this that they said they were going to. They didn't do that. So pretty much just escalating a bit into this China trade war. And it seems like the market has gone from not really caring about the China trade war and only focused on the Fed and rate cuts. And now that that has happened, they really care about the trade war with China again. So we'll see how this ends up playing out, but certainly a catalyst for the bears to work off of. The timing was just perfect yet again. The 4-hour time frame, we would absolutely look for a lower high compared to 301.34 on a V-shaped recovery from that dump on the FOMC yesterday. We topped out just about 50 cents, under 50 cents below that level. Lower high was set, and this is where the bears prove something to me, because you show me this pattern and I would say, yes, absolutely look for a lower high, but I would also look for a 4-hour higher low, and I would look for an equilibrium here as the most likely scenario. That obviously didn't happen because the bears proved themselves with volume and momentum. So looking at the daily time frame, have we changed the trend? I would still say the same thing as yesterday. We're not in a downtrend. We have lost the uptrend, absolutely. The bears are starting to prove something, but a clear bounce with a daily lower high and then a lower low would have to form. And you could, get different viewpoints from different technical analysts. There's no right or wrong answer. I'm just sharing with what my criteria is. I would not consider us in a downtrend, but absolutely, the bears currently have control. So the hourly RSI is only just now getting oversold, and that's why that dump was so extreme in reaction to that Trump tweet. It's because we were coming off of such a strong move that RSI levels had a very long way to go on some of the more extended time frames before we got oversold. There's a gap, or there was a gap here at 293.55. That's still in play. So 293.55 is a gap. 290.35 is the next support level after that. And again, what we care about at this point is the weekly uptrend and 273.09. So what I said yesterday is the bears will start proving things to us if we break the low of yesterday and if we see another big high volume red day. And I think I said a 1 to 2% down day. It was only 0.87%, but that's enough to definitely get our attention and to be watching to see how much can these bears run with this dump. We had a 15-minute bear flag at the end of the day, and it didn't confirm, but it's setting up for the potential that we could see weakness into tomorrow as well. Looking at IWM, so we pulled back 153.40 support, still holding. That held by about 19 cents, but again, same thing. Weak bounce attempt, potential 15-minute bear flag, and we're looking at the weekly potentially losing that support level. And we'd be looking back down to 145.32 if we see a bear break of 153.40 support, which is going to be in play tomorrow. Tech sector came very close to the all-time high, 195.55, before its rejection. We didn't see a clear break of the low of yesterday. We broke it by just about 9 cents. I consider that a double bottom, but again, 15-minute bear flag is a possibility. The daily time frame uptrend has been lost, and now the next level we're looking down at is 188.93, a gap to fill at 187.15, and the weekly time frame, again, expecting a weekly higher low to form compared to 169.27, and we're just going to look, is it a continuation kind of consolidation? Or do we pull back further and look for that equilibrium? And that's what I explained in the video yesterday. XLF, big time dump. So there's the bearish reaction to the financial sector, to the rate cut. And it took a little bit of a delayed reaction, 27.78 breaking. Looking at the weekly time frame, Support is down at 26.89. That's the next key level. And again, the most notable thing for me is that at the end of the day, the bears had momentum in their favor. So it is absolutely possible that we do see further downside risk into tomorrow. XLV. So we've got the healthcare sector holding on just fine inside bar. So this is what I would have expected SPY to do. See that big bounce? Set the lower high, hold the low of the dump from yesterday, and then form a tightening range. And that's obviously what did not happen, but that's what's happening on XLV. On any bounce continuation tomorrow, we will look for a lower high compared to 92.24, and the most important support levels are 90.58 and 90.71. Biotech sector also held on, very similar, same scenario. 4-hour time frame, equilibrium tightening range is forming, and the bulls are going to have to hold these support levels first thing tomorrow in order for those supports to remain intact. So pretty much out of the major sectors that we just looked at, it's only the biotech and healthcare sectors that are holding on. Everybody else is weak and at their lows, and we're just watching to see how many days in a row, how much bearish momentum can we see put together. Volatility index, so very clearly breaking out of that falling wedge that we were keeping an eye on. And again, it was the kind of thing where it's like, is it really going to be this clear and simple heading into the FOMC? And I learned a lesson. Yes, it is. And I have to remember that not all traders are watching charts and not all traders know what a falling wedge is, because if they did, it would have been too obvious for it to play out. But we broke that 1470 double top. That was a clear signal, getting some really nice follow through. And at this point, if you're looking at the leveraged ETFs, you're watching the hourly trend. And pretty much there's a short-term support level from the end of the day consolidation. Bulls, if they want to remain their strongest in the volatility sector, would look to hold that level tomorrow and then break the high to see continuation. Keeping in mind that the majority of these moves, again, they're short-lived, quick bull moves lasting about 4 days. Maybe the longer ones last about 6 days. But just keep in mind that, number one, to be walking up a stop loss to exit into the bull momentum if you are in a bullish position. And number two, you can be looking bearish on the volatility index rather than looking for a bounce in the S&P 500 with how many times we've seen this play out with the volatility index spiking just to fade. That's definitely what a lot of traders are keeping an eye on. Gold. Nice day by the bulls. We lost the little daily uptrend and saw a significant move off the low of the day. The bulls really responded to that Trump tweet well, and we're looking up at 1453 as the recent high, and that's the only short-term resistance level. And weekly high or low certainly looks set, just a complete turnaround from the first starting signs of weakness yesterday. Silver, the same thing, big long lower wick, bulls buying that dip, the weekly time frame, healthy consolidation at this point, and the miners were on absolute fire today from their gap down open. Huge move, strong close, and I did a trade review on NUGT from this morning, so check out the YouTube channel. I went in depth and talked about psychology and gave some insight into my mindset for the trade setup on NUGT. And as far as the weekly consolidation on the miners goes, again, same as what silver looks like, but just very healthy. Quick weekly high or low has formed. If we start with strength tomorrow, I will be looking for a day trade on bear miners. And that's just because we're very overextended on the hourly time frame. So any kind of higher open or gap up open, I would be scouting for a dust entry. And again, it's just the same thing as what we were looking at for SPY. 4-hour lower high compared to 34.93 is likely. So that's actually very similar. Again, just to pull up what SPY did on the 4-hour time frame, V-shaped recovery and a lower high formed. And we're looking at NUGT, V-shaped recovery, lower high is more likely than not, in my opinion. Oil, big dump today, responding bearish with the market as well. So again, the weekly time frame, 50, 59, and 60, 91 is the most important range, and I would expect the bulls to hold 50, 59 on this pullback and to remain in this tightening range into mid to late August at the earliest. But if this dump gets excessive in the S&P 500 and the markets as a whole, we could definitely see oil follow along. So that'll be very interesting. Bears will certainly prove a lot if oil dumps straight through 50-59 support and we get that bear break in the midst, M-I-D-S-T, of this SPY weakness. Natural gas, lower high set here, top of the bounce, very clearly set, and a very quick shift and turnaround. Tons of profit taking on the hourly time frame. Daily chart, the bulls have to form a higher low compared to 211.5, and then break 234 in order to change the daily trend. But it's just 211.5 support right now, and looking at the 4-hour time frame, we're a bit extended, so potentially if we start with weakness tomorrow in natural gas, I would look for a bottom fishing play off that support. So just doing this rundown here at the end of the day, it starts to set up the potential game plan for tomorrow. I know that I'm going to be watching bear miners, depending on how pre-market looks. I'm going to be watching natural gas for a potential bottom fishing play, and I'm going to be watching, of course, to see if the S&P 500 bears keep up this momentum. So caution buying the dip. You can absolutely still be looking to buy dips because that's what the market has been doing month after month, but just protect those levels, protect those trades with clear stop losses. The last thing you want to be doing is holding a bag and saying, well, the dips have been bought in the past, and next thing you know, the market has a 5% dump over the next couple of days, which is always possible. And we always want to be able to protect against the unlikely scenarios, because 1 in 100, those unlikely scenarios do happen. And if we don't protect against them, that's how we can ruin 100 good trades with one bad trade, by letting it get away from us. Stop losses are essential. Congrats to the bears, congrats to the volatility bulls, congrats to the bull miners. Certainly a lot of trading opportunity out there in different directions and different instruments. We'll check in over the weekend. No new video here at the end. We'll go back to a Colorado video from a few months ago, just from a quick little trip to some nature. And I'll see you all over the weekend. Have a good rest of your night.